This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index trading at $61,712, up about 1.2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And taking a look at our top story behind Bitcoin's surge, ProShares confirming in an SEC filing today they're launching a Bitcoin futures ETF that will start trading on the New York Stock Exchange tomorrow. The ProShares Bitcoin Strategy ETF is linked to Bitcoin futures that are traded on the Chicago Mercantile Exchange. News of long-awaited approval for a Bitcoin-related ETF sent BTC climbing to levels not seen since April, above $62,000 earlier today, opening the door to other companies seeking approval for similar products and accelerating the flow of investments into crypto.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The amount of money locked in Bitcoin futures contracts on the Chicago Mercantile Exchange surging to record highs as the U.S. Securities and Exchange Commission greenlighted futures-based exchange-traded funds tied to Bitcoin on Friday. The dollar value of open interest, or the number of futures contracts traded but not liquidated with an offsetting position, is at over $3.6 billion, marking a more than doubling for the month, according to data provided by Bybit. Glassnode data showing the total number of outstanding contracts on the CME has increased by 60%. The spread between the CME-based front-month futures contract, also known as premium or basis, and the spot price has surged from an annualized 1% to over 16% this month, alongside Bitcoin's 40% rally to $62,000 earlier today. Activity on the CME picking up amid increased expectations that several Bitcoin futures-based ETFs may begin trading in the United States, as well as stronger participation from stateside institutional investors. Joining us now to discuss is Matt Blom, Global Head of Sales Trading at EQONEX, a Singapore-based crypto exchange. Hi there, Matt. Thanks for joining us. So is Bitcoin's price volatility a matter of buy the rumor, sell the news, or will Bitcoin futures ETFs truly drive the price of Bitcoin up long term?
Yeah, I think we've been waiting for this moment for a long time. It's been about 8 years since the first application was put in by the Winklevoss brothers for an ETF, and it's been a long time coming. And I think what we've seen over from the end of the summer into this moment really has been the anticipation that we would finally get an ETF in Bitcoin. Mm-hmm. So I think the price appreciation has been seen because of that. And I also think that when you consider, we're going to be able to see that the size of these ETFs growing through open interest on the CME, which you just showed on the screen, we're really going to be able to see, on a daily basis, the institutional appetite and the retail investors that now have access to this asset class through ETFs.
So what is your strategy for navigating the volatility going forward?
Well, I think it's interesting, but I think long-term, the volatility of Bitcoin will actually reduce due to the introduction of ETFs. And as these products become more widely used, and as they kind of feed through the more traditional investment space, what it will actually do is reduce the volatility in Bitcoin as we move forward. Mm-hmm. And we've seen that already, post this halving, from what we've seen for the previous two halvings, is that actually the volatility in Bitcoin, amazingly as it sounds, is actually dropping.
All right. Well, we're certainly seeing volatility short term as the market stabilizes or finds its way. But I'm wondering, would a spot ETF have a greater impact than a futures-based ETF on Bitcoin? And perhaps in your answer, you could explain the difference in your view between a futures ETF and spot Bitcoin ETF.
Yeah, for sure. I think at the moment there was around 7 futures ETFs in process of application with the SEC, and there's around 11 physical Bitcoin ETFs in application at the moment. And as positive a news that the futures ETF is, and what that brings to a wider audience of investors that essentially can now come into this space and can invest in a way where they don't need to worry about owning and looking after Bitcoin. They can just invest in a product that probably sits on a platform that they're already very used to using. So it's lowering barriers of entry. Now, the spot version of an ETF, which is the one that's really going to drive the price much higher than we've seen from what we've seen since the futures ETF was launched, is purely because what people are waiting for there is the supply of physical Bitcoin to keep reducing. And we've seen exchange balances fall dramatically this year. And what we are seeing is that the hodler behavior is increasing, and the available supply of Bitcoin is falling to levels that we haven't seen for years. So a spot ETF would actually quicken the pace, and it would actually create the kind of the supply issue that many are predicting for the future for Bitcoin, which is very price appreciative.
And CoinDesk has reported that Grayscale, the sister company to CoinDesk, has reiterated plans to convert its BTC Trust, which is the world's largest investable crypto vehicle, into a spot-based ETF. So if that happens, will be big news. You also have a chart on Bitcoin's market cap approaching silver. And when looking at top assets by market cap, gold sits at the top with over $11 trillion in market cap. Bitcoin is in 8th place behind silver, but beating out Facebook and Tesla. What do you make of this standing?
Yeah, I think it's super interesting. And you can compare Bitcoin to the big tech stocks, basically, because a lot of these tech stocks work on a network effect in much the same way that Bitcoin does. But when we look at the finite supply of an asset, obviously the flippening with silver is the next on the list for Bitcoin to tick off on its journey of many landmarks. And I think the approval of a physical Bitcoin ETF will probably be the day that flippening actually happens. Now, Bitcoin has a long way to go before it can ever challenge gold. We would need to see Bitcoin prices with the current supply north of $620,000. So there's some way to go before Bitcoin can challenge gold, but it feels like it's only a matter of time before it takes over silver.
Okay, but do you think it could one day beat out gold or overtake it?
Well, I mean, that all depends on the value of gold as much as the value of Bitcoin. And as we move from an analog world to a digital world, if investors decide that gold is not the asset of the future and that Bitcoin is, actually the price depreciation that you may see in gold over time, coupled with an increased price in Bitcoin, is actually going to make it much easier for Bitcoin to take that number one spot at some point in the future. I certainly would expect it to happen in our lifetime.
Very bullish for Bitcoin. All right, Matt, thanks so much for joining us. That was EQONEX Global Head of Sales Trading, Matt Blom. Coming up, Square is exploring Bitcoin mining, and we'll catch up on the whole mining industry with Bitfarms. Welcome back. Continuing with our top stories, the New York Attorney General demanding 2 crypto lending platforms stop operations in New York State, determining them to be unregistered and unlawful. 3 further platforms were asked to provide information about their activities and products. The names of the companies contacted were redacted, but file names associated with the letters initially identified Nexo and Celsius Network before being changed. And payment service provider Square looking to develop a Bitcoin mining system. CEO Jack Dorsey tweeting on Friday, Square is considering building a Bitcoin mining system based on custom silicon and open source for individuals and businesses worldwide. Dorsey further tweeting that mining needs to be more distributed and energy efficient, and that if Square begins the initiative, it would follow the open source model it is using to build a hardware wallet. And separately, crypto mining company Bitmining is investing another $11 million in an Ohio data center. And 5 Wall Street firms, including Jefferies and Barclays, are initiating research coverage of Argo blockchain, which, with buy ratings, all of them expecting the company's Texas crypto mining facility to drive its shares higher. Joining us now to discuss is Ben Gagnon, Chief Mining Officer at Toronto-based Bitcoin miner Bitfarms. Hey there, Ben. Thanks for joining us. So there's a lot of investment going on, purchases, acquisitions in the mining space. Bitfarms, I'm wondering, are you similarly expanding? What's your growth strategy going forward amid all this activity?
Yeah, well, we've got a lot of different expansions going on right now. Most recently, we have our 210 megawatt facility that we're building down in Argentina. We've put out some announcements on that recently, is making progress, and that's our biggest expansion by far to date. It's about 7 times bigger than our next largest site. So that's our big one for us right now, and we're continuing to explore new opportunities in the United States, Quebec, and elsewhere.
And I'm really curious about Jack Dorsey's tweets. I don't know if you had a chance to take a look at them, but if Square were to enter the game in mining, would that change the game at all?
I think we're going to see lots of larger tech companies and institutions enter into the mining space over the next couple of years. What we're seeing right now after the China mining ban is a huge resurgence of American manufacturing, but really focused on Bitcoin. We're going to see huge groups come in here and taking advantage of these energy resources and energy infrastructure that was built to power the industrialization of America, and since was exported out to China and other countries. So there's going to be huge investment. There are big opportunities here in North America, and I think with that, you're likely also going to see some North American manufacturers of Bitcoin mining systems emerge as well.
I wanted to break down some of the tweets that Jack had laid out in a thread, and building a Bitcoin mining system based on custom silicon. He said that silicon design is too concentrated into a few companies. This means supply is likely overly constrained. Silicon development is very expensive, requires long-term investment, and is best coupled tightly with software and system design. Why aren't more companies doing this work? Maybe you can kind of dissect this a bit. Do you agree with what he's saying here?
I mean, we definitely could have some more manufacturers of Bitcoin mining equipment, I think, in the industry. Traditionally, this is a really expensive thing to do, to go out there and invest all this money into a chip design that's going to take 6 to 12 months minimum to go from starting point to something that might actually be a working proof of concept. And there's no guarantee on your return on investment. So that's prevented a lot of companies from investing in this mining industry before and really consolidated it within a few players. I think what we'll see over the next couple of years, especially as Bitcoin emerges as a major industry in the United States, is more traditional companies getting into the space. And one of the things that we saw with the silicon shortage last year is that Bitcoin mining has actually surpassed most of the other chip industries like Intel, AMD, Apple, and those others. When they were searching for more silicon capacity at TSMC, they weren't able to take advantage of the new 5 nanometer process level node, but Bitmain was able to do that. They were able to jump from 7 nanometers to 5 nanometers, while Intel, AMD, and the others were still utilizing 7. And that's because we have a simpler product. And there's a direct return on that investment. So we don't have to worry about, as many manufacturing concerns and marketing concerns and everything else. And we've gone from just in 10 years ago, going from computer chips being run in the home to leading the computer chip industry in terms of state-of-the-art, process technologies that are driving the entire chip industry forward. So I think it's a huge, remarkable accomplishment so far, and it's going to continue to have huge disruptions in the space with these chip companies taking more and more prominence.
Well, it's definitely going to be impactful to have big companies entering the fold, but a lot of people also argue that, hey, we want this to be as decentralized as possible. And I'll bring up another tweet from Jack saying that mining isn't accessible to everyone. Bitcoin mining should be as easy as plugging a rig into a power source. There isn't enough incentive today for individuals to overcome the complexity of running a miner for themselves. What are the biggest barriers for people running miners? And Compass Mining has at-home mining. You can plug into a mining pool, but do you see this as something that needs to be focused on as well, that having just more people running at-home miners and being able to create a bigger network that is more decentralized among various entities?
I think decentralization is crucial to Bitcoin's mission. More and more miners plugging in more and more equipment at home, I think, is a positive thing. But there are challenges with doing that, and sound is one, electricity consumption is another, heat is another. And so I think solutions like Compass Mining, are going to take a very significant percentage of the market of people who would otherwise be mining at home. It just simplifies everything to go online and sign up on a platform and service and get exposure to the same Bitcoin mining returns. And that's, very similar to what the publicly traded Bitcoin mining companies like Bitfarms is doing. We're making it easy for people at home, retail investors, to get access to industrial scale Bitcoin mining exposure without the complexities of securing the hardware, going after the electricity, installing everything, getting the permits, managing the sound, the heat, and the equipment for years on end. So I think we're going to get decentralization of Bitcoin mining through these more complex systems. And this is what we see whenever industries, industrialize and institutionalize, as we see these kind of derivative channels where we're going to see the decentralization take place.
All right, Ben, thanks for weighing in. We got to wrap it there, but that was Bitfarms Chief Mining Officer, Matt Gagnon. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.